Good evening, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hopefully all you guys had a very good day today. And in today's market action, guys, well, it was another somewhat sideways and boring day for the markets. The indexes, at least the major ones, such as the SPY and the QQQ, largely ending flat. And it was another day, similar to yesterday, where we didn't have much news in terms of macroeconomic developments, nor additional tariff news. But that all changed in the after hours, guys, when we got one big headline roughly an hour ago, about 5:30, 6:30 p.m. Eastern, whereby NVIDIA disclosed a material change, taking a $5.5 billion charge tied to its H20 processors exported to China. Now, this is pretty much a result of several restriction conditions which were in place since the Biden administration, reiterated last week on April 9th by the new administration, but it is not new news. Now, although this does represent 2.7% of NVIDIA's overall revenues, you can see that the damage in the after hours is quite massive. The SPY down about 0.75%, the Q's down 1.25%, and the semiconductor index down almost 3%. NVIDIA itself, though, down almost 6% in the after hours. So although the damage to NVIDIA's revenue is not that big to begin with, it is in terms of question of sentiment, guys. And semiconductors, as cyclical of an industry as they are, and front and center in the tariff headlines as they've been for the last few years in terms of export restrictions, of course, this does weigh on sentiment. So in today's video, guys, we're going to be taking a look at a few different things. Number one, I have a few key earnings to go over with you first. That is going to be earnings from Bank of America and United Airlines. Bank of America continuing on our bank earnings spree, which we started to disclose yesterday on the channel, and United Airlines to get a discussion into the health of the overall consumer and where the company sees the economy going into 2025. Thereafter, we will get into our major rundown of technical analysis on our major stock market indexes, followed by our big tech names, see whether or not there are still some very nice deals on big tech across the market overall. And of course, that NVIDIA news and my opinion on the matter will be included in the big tech portion when we go over NVIDIA's stock directly. So if you want to get to that section, it'll be down below in the description, as I always put the timestamps in the video description. And thereafter, guys, I'll just do a very quick rundown of the trades that I swapped today, quick little rundown of the portfolio, and that'll pretty much be it for today's video. So it should be another fun one. Let's dive right into the action, shall we? So the SPY down about 0.28% in normal hours, the Q's up 0.11%. Very timid day in the markets overall, because we know we have a few key big earnings from a lot of big players coming into the next 2 days, and it is a somewhat short trading week. I was saying that I would not be surprised if this were going to be an inside trading week, meaning that the whole week trades inside the confines of last week's massive candle with a bit of a reduction in volatility. And so far, these past 2 trading days have indeed been that, right? Inside trading days and a reduction in overall volatility, as the VIX once again today fell down almost below 30 at this point. Taking a look at the heat map right now, you will see that it was a very mixed market overall. Healthcare was not having a good day. Financials were fairly mixed, even though they had decent earnings as of lately. And technology also a somewhat mixed bag. Semiconductors were doing okay today. Most of big tech was down, pulling back from their nice rallies off the bottom in the past 2 weeks. And consumer defensives and even your interest rate sensitive plays were down despite the decrease in volatility overall. You can just see some constant pulls and pushes in the markets as of lately. Into the one-day relative performance, you can see that push and pull even better. Financials, technology, real estate, utilities to the upside, and the rest of the market to the downside, but not any major swings on all the major indexes, except for in the after hours tomorrow. Front and center, guys, will be semiconductors, of course. There might be some good deals in the markets, playing the volatility to sell some puts in the markets. And keep in mind, tomorrow as well, we have a big one in terms of ASML, guys. ASML right before the open. They will also give us an insight into the health of the industry. Is the AI trade still front and center? Well, we know it is pretty much, but it's kind of being camouflaged by all the geopolitics going on right now. And then, of course, on the Thursday session, TSM and Netflix will probably be your 2 biggest releases. Shout out to United Health Group and American Express as well. Some very major players coming in to the next few days. So before we get into more technical analysis, guys, let us dive into earnings right away. We're going to start off with Bank of America and pretty much wrap up the banks. This is the last of the very large consumer banks to report. I know that Citigroup reported as well, but it was kind of more of the same. So we'll look at Bank of America to start it off with, spend about 5-6 minutes on that, then go right on to Delta Airlines, shall we? So in terms of earnings, they had a very nice earnings session, as the rest of the banks did, as we talked about in yesterday's video. But that is not what we're looking for here. We're not looking for last quarter. We're looking for economic outlook and provision for credit losses. Is the bank well capitalized? Do they have enough liquidity on their balance sheet to withstand the blow of a possible credit crisis or a liquidity crisis stemming from a possible economic downturn? So their earnings last quarter, very good. Beat on EPS by 10%, and they beat on revenue by 1.5% as well. Now, if you listen to yesterday's earnings recap, you'll probably understand that, well, the bank performed very well in trading revenues, but that deal making was down. And that's similar to everybody: JP Morgan, Goldman Sachs, Morgan Stanley, Wells Fargo, all the ones we covered yesterday, yeah? Let's get into the article. So Bank of America tops analysts' estimates on better than expected interest income and trading. Interest income was a bit of a curious one. Some banks were up, some banks were down. JP Morgan did well on this as well. Wells Fargo did not do so much too, but that'll be the key component moving forward over the next 2-3 quarters. How is loan demand going to be? We know that the thoughts and premise of a recession is often a self-fulfilling prophecy. If you believe there's going to be a recession coming, maybe you don't just take out a loan for a $500,000-$600,000 house. Maybe you don't take out a new loan for a car. Maybe you don't take out a new loan for appliances and furniture, and maybe you just wait. All of those things, of course, brings less loan demand for the banks. You would expect net interest income guidance to be somewhat topsy-turvy, right? Somewhat a bit cloudy. Now, let's take a look at the most recent quarter. Bank profit climbed 11%, which was very good, and the revenue rose 5.9% as well. So a healthy quarter in the past for the bank. But what about moving forward? Here's what the CEO, Brian Moynihan, had to say. Our business clients have been performing well, and consumers have shown resilience, continuing to spend and maintaining healthy credit quality. That's the biggest part of that sentence, the credit quality. Though we potentially face a changing economy in the future, we believe the disciplined investments we have made for high-quality growth, our diverse set of businesses, and the team's relentless focus on responsible growth will remain a source of strength, basically saying we probably have the tools and the personnel to weather the storm if it does come. Equities trading revenue was up 17%, largely surpassing the estimate. 2.2 billion was the number. The estimate, 2.12, so very nice there. And fixed income revenue rose 5% as well. Investment banking fees, advisory fees, deal-making fees for M&As slipped 3%, right, amid the industry-wide slowdown caused by trade uncertainty. The exact same thing that we heard yesterday from all of our other big banks, so this should come as no surprise to you. Lastly, the firm's provision for loan losses, another key metric watched by investors as banks plan for a possible recession later this year, came in better than expected at $1.5 billion compared with the $1.58 billion estimate. So another one of these banks not increasing any provisions for loan losses. So they are fairly confident in the quality of the credit that they are holding on their balance sheet. Speaking of that balance sheet, let's have a look here in terms of their liquidity status. CET1 ratio is above the regulatory minimum. Regulatory minimum, we saw it yesterday, is 9.8. This one is setting at a cool 11.8. So they are fairly good there. Another liquidity metric when you look at, readily available marketable securities, right, which they call global liquidity sources of 942 billion versus the average loans and leases of 1.09 trillion. So they are well capitalized, guys, a lot better than they were back in 2007, back in 2008, right? So it's not a problem for them. And here's your net charge-offs. You can see the net charge-offs, the provisions for loan losses, are still sitting at 1.5 billion, the exact same as they were in Q4. So there was no net reserve build overall, the company being confident in the quality of credit that is on their balance sheet. Now, guys, if you just look at some of the metrics, some of their metrics are fantastic. We can't really project in the future in the event of an economic downturn, but the bank's been growing well, right? Payment spend in terms of volume and growth has been going higher. So payment transaction volume as well has been going higher in most metrics except for cash and checks. So that's very good as well. If we take a look as well here too, the CET1 ratio is reiterated at 11.8%. Very nice there, not too bad at all. Tons of deposits and average liquidity to cover their loan balances as well. And overall, guys, corporations, whether it be consumer banking, whether it be investment management fees as well, global wealth and investment management fees, Those are not doing terribly, although they were down. And global banking fees overall, nice little uptick here, right? So we can't use these figures to project into the future because we're heading into more of an uncertain period than a certain one. But at least, I mean, they're doing pretty well, all things considered, right? Net interest income is holding up. The net interest yield is also holding up against the, the expectations as of so far as well. And if you look at the net charge-offs, as you can see, has the bank been experiencing more of them in the last 2 quarters? As a matter of fact, no. Net charge-offs, right? People who just can't pay, that's just been coming down. And the provisions for credit losses as well stays right under $1.5 billion. So overall, it's not terrible, guys, right? Even commercial, people worrying about commercial, right? The net charge-offs for commercial are coming down. They have been coming down for the last 2 quarters. This is a bright point for the bank. A lot of people were worried about this in the last 2 years. We're just not seeing it right now. Could we possibly see it in Q3 of Q4 of this year if we have a recession? Yes, but then again, the banks are very well capitalized overall. So I wouldn't say that there's any problems on Bank of America's balance sheet just yet. And if you're looking for the book value of the bank, right, the valuation of the bank, it's not terrible either. I mean, they're sitting at a tangible book. They estimate it to be roughly 36.39. And we're kind of right around there right now. Yeah, we're like at $37, $38. So you are trading around book value. Now, whether that's an interpretation of fair value to you, that is something different, right? If you want to take the Warren Buffett approach, well, he was buying this bank when it was trading significantly under book value. So just because it's at book value, meaning if the bank were to sell all its assets minus all its liabilities, how much would you come in terms of net equity? Well, that figure would be what Bank of America is saying right here. That's the book value, yeah, 36.39. So, I mean, it's trading slightly above book value. I mean, is that a good deal? Well, it's a fair deal, right? But if you want to take the Warren Buffett value investor profile, right, you would look to see this one. If it can trade significantly under book value, then you know that you're actually getting a deal. So I would say they had a very good quarter. Their guidance was okay, although they did say there's an uncertain landscape, similar to the rest of the other banks. Is there any problems with this institution right now? No, and we are currently sitting in support. So if I'm looking to build Bank of America in terms of a long-term position, which Warren Buffett still has, even though he's trimmed a lot and repositioned some towards American Express in the last few years, right? It's looking fine, you know what I mean? Here in the mid-30s, if you want to build a position here, and if we somehow revisit the lows throughout this year in the lower 30, like this is a deal. This is trading like 20% under book value at that point. That's when it would be a deal. But is it fair value here? Yeah, and the bank thinks so as well, right? So anywhere here looking in this support range, if you want to play it, not a bad idea, not a bad long-term add to a long-term portfolio. But the true deals come all the way down here, 32, down about 27 in the lower bound of this support range down there. So all in all, fairly decent earnings for Bank of America. And that's pretty much all I had for you overall on this very solid consumer bank, which has been holding up. I mean, the price to earnings is low, but they always are for banks overall. So this one is, if we compare it with JP Morgan, this one is trading more around fair value than JP Morgan, right? I'm not telling you to buy one or the other. Some people just prefer JP Morgan as a stock, as a bank, but this one is pretty much fairly valued right now. Now, moving into the second piece of earnings here, which we're going to cover is United Airlines. So United Airlines had their earnings after the bell today, and after suffering a massive decline here over the past few months because of economic uncertainty, the drastic decline in domestic volume of flights as well, and of course, people taking less flights into the United States, which has been reported by a few different people, such as Booking.com and several other airlines. Like, it's not tinfoil, it's actually happening, right? Well, they're up 6.15% after hours from their earnings, but they provided a curious level of guidance, which we don't usually see companies do. We'll get into that in a little bit, but just to show you guys, very decent quarter for them. Beat on EPS by a very wide margin, 23% beat on EPS. Profitability for the company is pretty good. This is one of your more profitable airline companies, even though we know airlines are a highly cyclical business with a lot of costs in terms of keeping their flight fleet modern, right? Very high costs. They usually run a lot of debt. It's a decently profitable company overall. They're more consistently profitable than other airlines out there. One of the better ones in terms of just, measuring the quality of the company, right? Especially versus something like an American Airlines. They're also one of the larger players in airlines overall. I don't really like playing airlines that often, but what I do like is seeing the insights into the health of the consumer. They did miss on revenue by a fractional amount. I wouldn't say it's too important, but here's what was very strange about their guidance. You guys ready for this one? United Airlines gives two 2025 profit outlooks calling the economy impossible to predict. Now, they're not the only ones. We had comments yesterday from Jamie Dimon, comments from the BlackRock CEO as well, comments from Mr. Solomon from Goldman Sachs, and they were all saying the same thing. It is impossible to predict. So obviously, as backseat investors such as us, we're not in charge of multinational corporations. Well, we shouldn't be in the business of predicting the economy either. It should be a question of building long-term portfolios with a consistent DCA approach, or if you're trading, you need to react in this environment, guys, not predict. Predicting will get you nowhere. React to the price action alone and the news headlines as they come out and the sentiment shifts as they come out. So the economy is apparently impossible to predict. Let's move into the article, shall we? So United Airlines maintained its full-year forecast on Tuesday, but took an unusual step of offering a second forecast should the U.S. slip into a recession. Either way, it expects to turn a profit, which is good for them. The company left in place the expectations issued in January for EPS per share of $11.50 to $13.50, but said that in a recession, it would expect to earn between $7 and $9 per share on an adjusted basis. So that's why the market did not react to the downside, despite them giving either equal guidance or lowered guidance. They gave like a two-tiered guidance structure, which I think was a very smart thing to do by the company, saying that it was impossible to predict, but at least they are warning and they're giving some guidance of what they could expect in the event of a downturn. The company's outlook is dependent on the macro environment, which the company believes is impossible to predict this year with any degree of confidence, it said in its security filing. United Airlines said Tuesday that it plans to cut flights starting this summer to match disappointing domestic travel demand, while bookings for pricier international trips remain strong. And that's been the case when we talked about this happening in early February and early March as well, when the U.S. was having several headlines of reduced domestic travel. This is true, but still people continue to fly a lot abroad. And even myself, an avid traveler, I do notice that, or I have noticed that the last few times during the last quarter, because this is the last quarter, right? And I've taken several flights in the last quarter internationally too. There's a lot of people, a lot of tourists everywhere still, and a lot of the younger generation as well, talking about people, well, younger, people like 35 and under pretty much, choosing, and I have this conversation with many people that I meet on travels, a lot of people, guys, instead of buying material things nowadays, they're focusing on spending on experiences such as travel. And I think that's a secular trend that is not going to change anytime soon for that younger generation. Now, rival Delta Airlines also said that it was slowing its growth plans this year. They had earnings just last week. We did not cover them, but they said largely the same thing. The CEO here of United said that they will continue to execute our multi-year plan that's allowed United to thrive in any demand environment, so good for them. The unit revenue for domestic flights fell 3.9% from last year during the first quarter, while units from international routes rose more than 5%. You can clearly see the disconnect that's happening right now. Future bookings over the past 2 weeks have been stable, the company said, adding that premium cabin bookings are up 17% from the same point last year, and international bookings are up 5%, though the carrier did not provide a figure on domestic coach cabin demand. So apparently, your higher income demographic that can afford these premium cabin seats are doing just fine and still traveling internationally. So we once again see a bifurcation of the economy. Now, that's always been the case, right? Rich people are rich, and the middle class and the lower class, well, they tend to get hit more hardly during times of economic turndowns, right? However, it's nice to see that the people, especially your high income demographic, are continuing to spend, because you need them to continue to spend, guys. They represent a large portion of GDP. Now, lastly, the latest trend shows how profitable airlines such as United and Delta are capitalizing on demand from travelers willing to pay more for pricier seats and other high-end products, even as economic concerns weigh on consumer sentiment and amid President Donald Trump's trade war, mass government layoffs, and other factors. Delta said last week it could not reaffirm its full-year outlook, citing uncertainty in the markets. That's pretty much everything for United Airlines, guys. Is the company cheap? Well, airlines are always cheap, guys. If you take a look at this one, on a trailing basis, I don't even need to give you a forward. On a trailing basis, it's trading for a 7. 7 forward or 7 trailing price to earnings. Why are they always trade so cheap? I mean, American Airlines trades this cheap. They trade at like an 8 right now. Delta Airlines always trades this cheap as well. They trade somewhere near a 7 price to earnings. Why always so cheap? Well, just because, guys, these companies are not predictable at all, which is why I do not personally invest in them. Sometimes you can have some nice secular growth trends like we were seeing through 2022, 2023, coming out of the pandemic, travel was booming. And there you go, you got your pop. Is it a good investment for a long-term portfolio? That's very debatable, guys, right? It's just too cyclical of a business for me. It doesn't hold a lot of the moat criteria that I'm looking for, yeah? They have a lot of debt, these airline companies. They always have, they always will. It's just their business model. They're not known for returning a large amount of capital to shareholders as well in terms of dividends or buybacks too. They just kind of have to continue maintaining their fleet of planes. Is it a swing trade? Well, I mean, kind of similar analysis, right? If you do want to take a wide swing trade on these companies, well, your stop loss would have to go below the tariff lows. Then you'd be targeting several take profit areas, such as this guy would be TP number 1. Then your all-time high region up here around 100 would be take profit number 2. But of course, buying airlines in the midst of economic uncertainty, maybe not the best trade. It can work out if ever the economy does not have a downturn. I would argue the trade should perform very well. But if you take their words for it, right, it is impossible to predict. So that is also what I'm saying about these airlines is it's impossible to predict, right? There is a swing trade thesis here at hand. But in terms of a long-term portfolio, I'd be somewhat hesitant to put the airlines in mine. And that's everything we had for our earnings, guys. Now let's jump into the fun stuff. Let's do some charts, shall we? So the SPY was relatively flat today, only 0.28% to the downside, inside candle overall. Now, I'm not going to spend too much time on the technical analysis, guys, because tomorrow and Thursday are going to be the busiest days of the week. Why? Well, tomorrow we have ASML, and we have a few insurance corporations as well. And then Thursday is going to be a very big day too. You're going to have a lot more movement on these two last days than you probably had in the first 2 days, especially with that NVIDIA news that came out today after the close. Keep in mind, tomorrow, as well as the biggest day for macro data, we get retail sales in the morning, which could move the markets in a wide range of possibilities. And then after, we have Federal Chair Jerome Powell speaking in Chicago at an economic forum about his stance on the economy and on inflation and everything else that's going on right now. Those should be your two big market moving events for the day tomorrow. And of course, that ASML earnings piece in the morning. Now, keep in mind as well, the fear and greed index is still at a very low read, extreme fear of 19. Market momentum still remains extremely weak as the markets is, below their key moving averages for the most part. Stock price strength, net new 52-week highs and lows is very, very, very low right now. Many more companies trading near their 52-week lows rather than their highs, of course. And stock price breadth, although we have seen some form of improvement, stays still somewhat low. Before we do the SPY, we'll get into those breadth indicators, and you guys will see what I mean. Percentage of stocks above their 20-day moving average, still very low. Not as low as we saw a few weeks ago at 4, right? That was a huge time to buy. Right now, it's in the lower end of the range, and this you can see, guys. I'll put it on the weekly. Yeah, this is like a 15-year trading range or plus. It's always a good proposition to still be acquiring stocks at the lower end here, but it can move lower as we saw a few weeks ago. Same thing for the percentage of stocks above their 50-day EMA, a very low read of 18, not as low as we got last week, which was at a 6 before the tariff pause, but still in a very low range. So accumulating for a long-term portfolio, I mean, you have the data here, right? Since 2002, has it always been a good buying opportunity? Yes, it has, but we have to buy slow and we have to only buy high quality companies. And percentage of stocks above their 200-day moving average, 24.62, also in the lows of the historical range since 2002. Is it as low as we saw last week? No, but is it still a good buying opportunity? I still do think so as well, which translates into the SPY right now of just being kind of in the middle, right? In the middle of prior to the reciprocal tariff announcements and the reciprocal tariff pause right here. It's almost in the middle, not quite, a little bit more towards the top. But as I was saying yesterday, guys, there's two key levels at play here. The top of the Wednesday candle into resistance, 550 to 564. Crack that, and you're officially in a brand new daily uptrend, and we will then measure it from there. However, come below Thursday's low in the next few days of trading, that is a new daily downtrend, and you will have to count on the bulls to place support down here, 525 to 496. They are trying to go for the weekly trend recapture. This is a 618, almost 65% bounce. The weekly bears were in full control. We got a very nice bounce. Now they have to change the trend. A bounce is very nice, but if it's not followed up by a trend change, then it's only a bounce. But usually when you have such a sizable bounce and you clear a massive support area, the odds of you getting it are better than not. But there's nothing to say that we can't just hover around here for a while through the earnings season, right? That's also possibility number 3. The way that I like to play this, you guys already know, when volatility is high, directions are unclear, and when it's somewhat impossible to predict, well, the best thing I can do is sell options. On my favorite stocks, sell put options well below the market towards the fear lows. Moving on the QQQs, same concept, only up 0.11%. Two clear areas, yeah? You either clear the highs of Wednesday or you clear the lows of Thursday. If you do the upside here, we're going into a new daily uptrend, and that will be into resistance 485 down to 469. And to the downside here, if you clear 433, that would be a daily new downtrend. You'd have to count on the bulls to play defense in the support range, which is 447 down to about 423. All of these guys from back then. And same thing as the SPY. We have a very nice bounce, right? In the context of a weekly downtrend, it's a very nice bounce, 618 bounce, but a bounce needs to be followed up with a trend change, or, you cannot derive a very clear trend for some very large position sizing overall. We'll see if they can do it, or will they get rolled over, or will we actually get option number 3, which is some form of a tight range of accumulation. We don't know, guys. Impossible to predict. The best way that I can trade this, though, is selling puts very close to the bottoms on days where volatility picks up, and we have negative news headlines such as the one that hit NVIDIA today in the after hours, which could see big tech take a little bit of a candle down tomorrow. Moving on to financials now. Financials had a decent day off of those Bank of America, and even we didn't cover Citigroup, but even Citigroup was up after their earnings today. So the bank's fairly good. We did clear the highs of Wednesday's candle. This is officially a new daily uptrend, however, into resistance, right? 48.31 to 46.78. Normal that the bulls are seeing a little bit of pain right there. They actually mounted above the 200-day EMA. We'll see if they can hold it, especially when the indexes are looking like this in the after hours right now, or if we try to set a higher low. Anything above 44.57, looking for a higher low for possible further trend continuation attempts by the bulls to clear this big resistance range. On the weekly charts, the bears are still in full control right now, although the bounce is quite sizable on the weekly charts. 618 bounce, so once again, gives them a chance to try and get the daily up or the weekly uptrend back, and support below stays 45.78 to 44.72 overall. Any further declines could present a decent opportunity on a weekly recurring basis to sell some put options at the lows of the market. And I would love to find Bank of America. I mean, you saw me do one on Wells Fargo earlier this week. I did it yesterday, in and out in one day, yeah? Bank of America, same thing. If I could find Bank of America short puts down here, I wouldn't mind doing them. Even Wells Fargo, if I can constantly find Wells Fargo short puts down here in the mid-50s, I wouldn't mind doing those as well. Into support, a very large area, right? Into the tariff fear lows, into 25, 30% sell-offs from the top. Wouldn't mind those at all. Moving on to healthcare right now. Healthcare also not quite eclipsing the highs of Tuesday and Wednesday, still kind of trapped. It's very messy right now. All you need to understand, this is a very wide range of accumulation, guys. They're trying to go for the trend change. The higher lows are quite unclear, but they are here. 131.50. Yeah, if you crack the highs of last Tuesday, it is officially a new daily uptrend, and the bulls are doing a good job of reacting from the support range, which is all these guys from 2022, 2023, and the 200 weekly EMA, which very, very rarely gets tested for healthcare. Healthcare is known to be quite robust and resilient in the face of economic downturns. It's one of those defensive sectors, but even it got brought down with the uncertainty. So as of right now, the size of the bounce is not as good as financials, nor the SPY, nor the QQQ. Size of the bounce, only 50%. So it's anybody's ball game right now. Can we revisit the lows? Sure, but we can also be in motion for a higher bounce and possibly reset the uptrend. All we know is that this is a massive area of support. So I'll be looking to play short puts at the bottom end of the range. And that is on my favorite healthcare companies in the market. Whichever one you want, try to target the fear lows. Moving on to semiconductors. They were actually up 0.65% today, but now in the after hours, down 3.2%. So 3.2% right now, 196 is the mark. As you can see, not good enough. It's still within the trading range of last week. So no clearly defined trend will be set even with tomorrow's move. However, pay special attention to 189.39, the lows of Thursday, highs, lows, trying to go for the trend change. If we get rejected and flush here, that is a new daily downtrend. We did not quite make it up to resistance, 215, up to 232. That's a big level, guys. A very, very, very big level for the bulls to crack through at that current time. If you break down below the lows, well, the bears will be in motion, right? But as long as you don't lose these lows down here, you're still trying to set some form of a new possible weekly uptrend, right? So we'll see if that happens. Overall, the size of the bounce on the weekly was quite decent on semiconductors, a 618 bounce, similar to the rest of most other ETFs out there in the market, most of the other sectors. We'll see if they can protect it. What's my favorite way of playing this when NVIDIA is down 6%, stuff like that? I like to find short put opportunities with higher volatility towards the lows of the market. AMD, we have ASML tomorrow as well. TSM, I've played this one as well a few times over the past week and a half. TSM, love finding short puts below the lows of the market. It's the best we can do. Fire off short puts, which are just buy limit orders that pay you at the lows of the fear moves. And we know that we're possibly, if we are assigned, getting the best possible prices rather than trying to, fire off trades with size and make a bet with the market. Yeah, let me go mass long here into resistance, or let me go max short and try to recreate the same fear environment that was over the case of last week, right? That's why I love selling options, guys. It lets me not pick a direction and just make sure that I have enough distance between me and the lows that even if I am assigned, if it comes down here fast in a week, it'll probably be daily oversold, and I might be able to get a bounce and get out of those contracts, or just take the shares and be guaranteed that I'm getting the best possible price for them, yeah? Moving on to the IWM Russell. IWM Russell also struggling today, only 0.12%, not clearing the highs of Wednesday. Still looking for a new daily uptrend, but similar to the rest, is into resistance now, 200 down to 188, so keep that in mind. In the event that we flush without new highs, we flush the 177 higher low. Well, the bulls will need to do a heck of a job protecting the downside here. 178 to 163 is your last area of support. Very big one, though, the lows of 2022 overall. And in relation to our other sectors, this one had a very weak bounce, probably the weakest of them all. The bounce on the weekly is not very good if we lost that daily uptrend in the rest of the week, guys. Only it shortly came into the 50%, but all things considered, where's the biggest candle close? It's about 38.2%. So very weak bounce on the Russell overall. And I would not be a fan of playing this sector unless I can get some crazy short puts really low under the market. But growth, especially non-profitable growth, which a lot of the companies in the Russell are, is just not my favorite sector of the market right now, guys, amidst the economic uncertainty, of course. Moving on to the Dow Jones. Dow Jones healthily closing near the highs of Wednesday, but not eclipsing them. Notice there's a common pattern. Everything's coming close to the highs of Wednesday. That is also synonymous with being into resistance for a lot of these indexes, right? 41.3 down to 40,500 is resistance for the Dow Jones, area of previous resistance, and a few moving averages there as well. The lows of Thursday are going to be your higher lows. So the bulls trying to go for the trend change. If they get rejected into tomorrow, you're looking for a higher low, anything above 38,430, looking for a higher low for a possible second or rather third attempt at cracking this resistance range. Who's in control of the long-term time frame? Still the weekly bears. The bounce, though, is very healthy right now for the bulls on the Dow Jones, right? A over 618 bounce. It gives the bulls a great chance of trying to go for a weekly trend change, or at least maybe a consolidation accumulation range, maybe above the support zone and between the resistance area as well. So it could be a little bit volatile here for the Dow Jones. I would not be surprised, but overall, not looking terrible. And that is pretty much it. If we want to look at our minor sectors, we're going to go through these very quickly. XLP, basically doing a whole lot of nothing, right? Range bound as well. Come down here, guys. I love selling short puts on XLP in this lower range support. And this is resistance. So this is consumer defensives. It's looking quite good, although it's just the short term, huge bounce. If we do get a pullback here, maybe we get some opportunities to write some short puts. XLU, same concept, huge bounce out of the tariff pause overall into nice support. That area is also the prior 2022 highs. Not a bad opportunity to write some short puts at the bottom end of that range. Real estate as well. Nice bounce, but still a weekly downtrend now into resistance. This whole area now unfortunately becomes a resistance range for real estate. So bond uncertainty, interest rate uncertainty, real estate uncertainty as well. Not my favorite sector when I compare it with the other defensive ones like XLP and XLU. And lastly, energy. Energy also candling down. There are some good opportunities on energy, but it could be a bit of a bumpy trade. Yeah, we're battling with the trade war, the economic uncertainty, the recession probabilities, and bullish oil seasonality and all that. So there's like push and pull forces amongst everything. Obviously, international headlines between Ukraine and Russia, stuff with Iran, stuff with, Yemen and stuff like that. You know what I mean? Like, there's just, oil is such a complex trade for the most part, guys, but it did break down below. So now at this point, they have to hold these lows down there, but decent opportunity, as you saw me do yesterday, when you can find some companies down red. If I can write puts in a very low area of supply, or basically, of support, right? I'll look to do those overall. CVX is one that I'm eyeing for those continued opportunities. So that's pretty much it for the index rundown. In terms of the VIX, well, the VIX is down 2.4% today, but maybe with that NVIDIA news, we get a bit of an uptick tomorrow. Tough to tell, guys. All I'm here to say is, yes, we're off the most recent very large move, but 30 is still elevated, right? And we know that when times are very volatile, such as 2022, such as 2020 after the pandemic into 2021, such as, the flash crash of 2011, such as Trump episode number 1 in 2018, and the great financial crisis. When times are volatile, they can stay volatile for longer than people think, right? This VIX can stay between 25 and 35, with some moves down, then pops back up, moves higher, then pops back down. It can stay all over the place for longer than you think, as long as uncertainty is here to stay in the markets, which I do think it might just be. In terms of yields, yields are also putting in another candle to the downside today. We'll see, though. Very tough to predict. Yields as well, a very complex trade, guys, but you would want to see this one move down. It's kind of directionless right now. It was a weekly downtrend, engulfing move. Who knows if we go higher, right? That all depends on how resilient the bond market can be and if large players either dump or start buying these U.S. treasuries at a rapid pace. The 20-year yield, arguably the same analysis as well. Very difficult to predict where it's heading, right? Some people are saying it's going above 5 because the U.S. has lost the predictability factor, and you have foreign nations such as China, which are dumping U.S. bonds to kind of have money to then manipulate their currencies to keep their exports competitive with the rest of the world. Of course, you have so many moving parts. You also have the bond vigilantes, which are either net long, net short, and just speculating. So many different things in play here, guys. So it's very difficult to predict. All I'm here to say is TLT is still a very cheap hedge right now, paying a very decent interest rate. If you have a long enough time horizon, these bonds will eventually come down when the economic turmoil or the uncertainty factor is over. But as you saw, my leaps are dated 2027, not 2025, not even 2026, 2027. That's how far I'm going out to make these play on bonds, because I think it's going to be a very complex and bumpy trade for the foreseeable future. And now lastly, gold. Well, gold continuing on its upswing, getting another bump right now in the after hours as a result of those uncertainty headlines. Gold just feeds off these uncertainty headlines, right? So moving into play, the bulls, very nice engulfing move right now. Not even, guys, not even really losing too much here off the top, right? They lost it temporarily, ever so temporarily, lost the hourly uptrend, reclaiming it pretty much right away. But the 4-hour, truly, I mean, make an argument that was lost, but they never lost the 12 EMA, right? So you could call this a daily high or low, but in all reality, this is still one very large move, right? Only a 1 day of consolidation in the grand scheme of how gold has been moving. It's not enough to really call it a daily high or low. That being said, any pullbacks could be warranted into the 3130, 3150 range, which is the previous range highs right there. And the 12 EMA, smooth little pullback maybe for some follow through. Chasing gold up here, unless you're day trading, guys, right? Day trading, I mean, you're not even looking at the daily charts, only maybe for structure overall and control. So trading different, but like positioning in gold at the high of this move with the heavy amount of capital, expecting it to go to like 4,000, you may have to temper back your expectations, right? In my opinion, it's more cautious to be waiting for the pullbacks. Remember when we were up here, I was saying wait for the pullbacks and then position. You always get these pullbacks on gold. It always does it, guys. So if you're waiting for that, your waiting may not be in vain either, right? Now that's pretty much it for our other segments there. Looking at Bitcoin. Bitcoin is just barcoding here for the last 4 days. Nothing really happening on Bitcoin. They're trying to go for the inverse head and shoulders. We'll see if that's the case. But above us is big resistance. All the moving averages. You can see how much of a struggle it's been to maintain above the 200-day EMA and the resistance range 92.3 down to 86.9 roughly. Let's just call it 93K to 87K. Yeah. Now moving in, that's a huge area, and the bulls are the bears are still in full short-term weekly control, trying to set up the lower highs. Let's see if the markets unravel for another leg down. Well, then you guys know where Bitcoin's going, right? 73 down to 67. It's held up very well, all things considered. Whether or not that's because Michael Saylor of MicroStrategy is buying, whether or not it's because people are likening gold or Bitcoin to gold right now, I don't know, guys. At the end of the day, Bitcoin is a risk-on asset. It's a speculative asset. There are many different forces at play. It has a limited supply, of course, which does help in maintaining some of the price action levels, especially when you have large players and large institutions and the ETFs, which are not really dumping Bitcoin overall. They have a 5, 10 plus year time horizon. So the short-term price action is somewhat dicey, but it is kind of set up for a short, not going to lie, if you take the weekly timeframes into consideration. The stop loss for the short would have to be above yesterday's high, and you should be going for lower low trade overall, but not looking too bad on Bitcoin. And that's it for our sectors, VIX, and the other little things. Now let's get into big tech, shall we? All right, so moving into Apple right now, they were down 0.19%. Most of big tech, I mean, it's unfortunate they removed the expected or the after hours moves right now, but Apple from the end of the day, they're pretty much probably down like a percent. Most of the other big tech names are down like a percent. NVIDIA was down 6, AMD was down 6 as well, but Apple still maintaining right now, trying to go for the gap fill from the yesterday news event. Apple with the daily uptrend, of course. Any move lower looking for a higher low. Anything above 183 looking for that higher low for possible further trend continuation. We got rejected yesterday at clear resistance, 210 up to about 220 and below us. Support stays put, 196 down to roughly 187. It's a pretty big range overall. It's the 2023 and early 2023 highs, so not too bad there as well. And we know that Apple they're trying for it, guys. They're trying to set a very nice weekly 70 plus percent retracement size, which is very good right now, 78%. So the bulls do have a lot of space here to try and recapture a weekly uptrend. But, without an uptrend, it's very tough to predict or to position rather for some size continuation into the all-time highs. That being said, there's a third case scenario where we devolve into some form of a tightening range of accumulation. One thing's for sure, how I want to trade Apple: dips into support, rapid dips into support with short-term oversold hourly conditions will probably make me fire off a short put in the lower 180 range, looking to acquire some shares down there in the event we get a breakdown, or if not, if it's just a pause and run. There's a swing trade attempt here as well for daily trend continuation. Stop would go below there, take profit above here, of course, or just looking for some short puts. So I do like Apple in terms of swing trades down in that lower location, but the valuation right now at 200 it's okay. It's not terrible. It's not as terrible as it was over here, but it's also not cheap, right? So long-term portfolio add nibble, like tiny nibble. Down here even is like still just a nibble. It's not the cheapest stock in the market right now. Moving on to AMD. So AMD was up 0.84%, but unfortunately that NVIDIA news took them down 7+% in the after hours. So once again, AMD is now back below the $90 range. We will put a line right there so we know where we stand. The higher lows are right here, 85.21. So no new highs. If you break 85.21 to the downside, that is a new, unfortunate daily downtrend overall. And then you'll be looking for the bulls to protect lower bound of support again. That lower bound of support is 83 down to $65. These guys back here from 2022 and these guys all the way back from COVID of 2020. Now, AMD's valuation is still very good, but we know the narrative around semis right now is somewhat tedious, right? It's a battle. The AI trade is still well alive. Capital is still being invested, right? Companies are still using these tools and they still will require AMD's products. But we know the tariffs, the export restrictions, all of that is having more of an impact on sentiment and really preventing big money from buying these trades up. So we will see if they break down below. The weekly bears are still well in control of this chart, weekly downtrend. They're still looking for a higher low, trying to go for some form of a weekly uptrend recapture. We have not had a weekly uptrend on AMD, guys, since September of 2024. So please do keep that in mind. We are oscillating between weekly oversold and not. And by tomorrow, maybe daily is back to daily oversold. How I like playing this one, I'm looking to sell puts below the fear lows as well. Should be fairly clear by now, yeah? I'm not trying to predict short-term directions, especially not on semiconductors. It's just long-term portfolio, nibble, yeah. Long-term portfolio, nibble, yes, absolutely. I'm a big fan of AMD long-term, 2-3 year time horizon for the buys, right? Swing trades, it might be a little bit bumpy, yeah? Or unless you're doing short puts, which is my favorite version of trading right now. Moving on to Amazon. Amazon also down 1.39% today. I mean, no news, truly, no real news. Couple analyst downgrades over the board, but that's been the case for the entire market the past few weeks. Other than that, nothing much to kind of report right here. The low of Thursday is still the mark here, guys. Nice push higher, right? Nice and almost engulfing move. That was a very big bounce, guys, on the weekly time frame. That was a 78% bounce on Amazon from the bottom to the top. However, the lows of Thursday are your daily higher lows. Lose this, and you do end up with a daily downtrend. Now, that's okay because the bulls are working with a lot of space. Resistance, tough to get through, 191 to 180. And below us, huge support still, guys. 173 down to 144. I know it's a wide range. We have a couple things here. We have these guys from earlier in 2024, and we have the entire all-time high range from 2020 into 2021. It's going to be very tough for the bears to get through that as if it's not even there, which is why on red days like today, I love selling puts on Amazon as close as possible to the fear lows as I can get, guaranteeing myself that I'm getting a good value for my money. Now, Amazon is currently trading at around slightly lower than 30 price to earnings on a forward basis at a 1.5 peg, but the company is expanding very nicely. EPS, free cash flow, net margins, and Amazon's like an octopus, right? They touch everything. They touch pharmaceuticals, they touch advertising, they touch robotics, they have e-commerce, they have AWS, and so many more facets to that business. I like this business. It's probably my favorite stock of all the Mag 7 names for the next 5 years, all things considered. So keep that in mind. I'll continue to write short puts below the market. So pay attention to your resistance and support levels. Moving into Google right now, down 2% is Google, 1.73 to the downside, but Google did something that others did not. They actually set a daily uptrend in motion, right? Higher high officially, but where? Into resistance, 175 to 163. It's going to be very tough, guys, for the indexes and the tech names as well to get through these massive areas without more uncertainty removal from the market. That's why I think that my likely scenario, maybe moving forward through earnings, might just be tightening ranges, like for everything pretty much. The indexes, tech names, and many other plays in the mix as well. So just play the ranges, guys. Very simple, right? Don't try to predict. Just play the ranges. You know, you get something down here, the take profit should be here. Not trying to go for the moonshot amidst uncertainty, right? I mean, if you want to, sure, but you know, that's not the way I trade. So moving into the Thursday lows, as your higher low, 153 roughly. If we're looking here, we're looking for a new higher low for possible second attempt at cracking through the resistance. If you flush this low, you lost the daily uptrend attempt, and you'll be looking to your weekly bulls to play some defense once again. Who's in control here? Well, the weekly bears, of course. It was a very nice bounce, but if the bounce does not get a trend change, then the bounce is a dead cat bounce, right? So keeping that in mind, 618 bounce overall. Nice support below, though, 149 down to 135, which is why me personally, how I'm trading Google, well, you might have guessed it, I'm selling puts, guys, near the fear lows, where the stock would be down roughly 30+% from its all-time highs. The valuation is very good right now, but can get cheaper, 17 on a forward price to earnings basis. And I'll remind you that support is all the guys from 2021 and 2022. Moving on to Meta right now, down 1.87%. Meta's battling with a few different things. There's been some headlines recently circulating. I mean, it's not new news, but Meta's had an antitrust case lawsuit on it. I mean, what's new? The entire Mag 7, even NVIDIA has an antitrust lawsuit against them. No, we'll see if they're forced to divest from Instagram and WhatsApp, similar to Google. Is Google going to be faced to divest from their Google Chrome browser or several different things? We will see, right? A lot of these lawsuits have been underway for a very long time. We'll see if it upholds in court. Meta right now trending down, and unfortunately, we have now broken below the lows pretty much. Well, we never really set higher lows to begin with, right? These are just kind of inside trading candles overall. You can call this a somewhat of a daily downtrend. In the grand scheme of things, though, it was a very nice move to the upside. The weekly provides more clarity. Rejection from resistance 600 down to 560, and now we are into support again, 531 to 444. How do I like playing this one, guys? You guessed it, short puts under the market. If you don't have the buying power for short puts, well, then you might just want to find something else. But predicting Meta here is very difficult. I mean, you can go for a short play. The stop loss would be above here, and your take profit would be the bottom end of the range. It's not terrible, but who knows if it actually follows through or not. Meta could have some good news tomorrow and puts the stock up 4 or 5%, right? That being said, we're looking very good here. 61% bounce. We'll see if the bulls have the space required to protect these lows, or whether or not Meta just continues to give back and give back and give back, and then flushes the tariff fear lows overall. I like this company, guys. It's trading relatively cheap right now, but it has a constant overhang of advertising, right? I mean, it's an advertising business in an environment that you're talking about a recession. The first thing companies do is pull back on advertising. That being said, it's around a 20 price to earnings on a forward basis. Decent, especially in light of its amazing free cash flow and amazing net margins. Even if their revenue drops, their net margins will be safe, in my opinion. Moving on to Microsoft right now, down about 0.54. Microsoft holding up better than most, right? Into resistance, 392 up to 408 is the mark. And the lows of Thursday are your higher lows, into support as well, 378 to 364. So if you do roll this over here, guys, well, look at the weekly charts. The weekly charts provide the best clarity on everything right now. Nice engulfing move, looking for a higher low, and maybe a trend change. If not, if we just fade, you guys know what the drill is, right? Selling short puts under the market, guys, into the 2021 highs and the consolidation area of fall of 2023. Microsoft needs no introduction. One of the most solid companies in the entire market. Long-term opportunity for a long-term portfolio. Of course, Microsoft is right now. No problem, right? It's not as cheap as it was down there, but is it a bad buy here? Not even close, guys. It's still a very decent buy, in my opinion, for a long-term portfolio. Moving on to Netflix right now. Well, Netflix is going to be very tough to tell. They only have 2 days before their earnings, right? So I don't want to project too much. 5% to the upside today. That's largely because, guys, you know, they're pricing in the earnings right now. You see the headline here right next to me, targets a 1 trillion market cap, plans to double revenue to 80 billion by 2030. So that was a headline that came out today. I'm expecting their earnings to be quite good. This is already a pre-earnings rally, but it stands to argue, right? If they're already going to be up 5, 6, 7% into earnings, well, maybe earnings is kind of a dud in terms of the reaction to it. I think their numbers will be very good in terms of free cash flow, revenue, and stuff like that. But maybe a lot of this earnings move is priced in. So we'll keep an eye on this. But Netflix holding up better than most. Big daily uptrend right now. Pull back, look for a higher low. At this point, I think above 900, looking for that higher low. But with earnings on Thursday and an expected move of 7%, it could go either way. 7% up from earnings, right, you're back at the all-time highs. 7% down, you're right back into support overall. Not a bad buy for a long-term portfolio. It's not cheap by any metric. We're trending like at a 38. I did it at 855, but just add 10% pretty much to whatever this number is, slightly more, and you're looking at about a 38 forward price to earnings. It's a bit expensive, a 1.65 peg as well. It's a bit expensive, all things considered, but not a bad buy if you don't own any Netflix right now and you want it for a long-term portfolio. Just be mindful, though, if the entire market continues unraveling, you might get some better deals between 8 and 700 down the line. So keep some cash for it, but nibbling is fine. Moving on to NVIDIA right now, up 1.35 during the day, but now you saw the news in the after hours at 105. So we'll circle this area right there, like Jen Psaki will circle back. And now moving on further here, we know that the higher lows are set on Thursday. $100 is the Thursday higher low. No new highs. If you break 100 to the downside, that would be an official daily downtrend. Not quite getting it done, mounting above this resistance range, right? 112 down to 100. If you lose that, it's not going to look very good, guys, right? Even though we do have a nice engulfing bounce, who's in control? The weekly bears are still in control of NVIDIA overall, right? Very nice 78% bounce, but a bounce is only a bounce until it results in a trend change to commit to more capital overall. We will see. Can they protect this range that they've just claimed back for the most part, right? We will see how the week ends because now we are here. If we end below it, the box still stays red. If we end above it, I can finally turn this box green overall. My favorite way of playing this, you guessed it, guys, selling short puts under the market, well below the market on NVIDIA. And I'll remind you, going through the news, right? They record the $5.5 billion charge. This is a loss, by the way, to H20 processors. It all started under Biden, right? So, on April 9th, the U.S. government told NVIDIA it would require a license to export the chips to China and a handful of other countries, right? The company said in a filing. The reason it's released today is they filed a material change. This is when a company has to file, a material change. A material change essentially means that something happened in the company that shareholders should know about, right? If for some reason the company spent, I don't know, $2 million on coffee machines across its factories, that is not a material change that requires shareholder disclosure. But a big chunk of revenue like this, even though it's a 2.7% loss, aka a charge, that is a material change. So that's why they disclosed it today, which is why they're down. The H20 is an AI chip for China that was designed to comply with U.S. export restrictions. It generated between 12 to 15 billion in 2024, right? This, guys, if you notice, this is not new news. This crackdown on H20s, this all started under the Biden administration. But not only that, you heard this from me a few weeks ago on the channel. You guys remember this headline? NVIDIA's H20 sales in China threatened by Beijing's new green rules, and the revenue was at risk. This was after the U.S.'s first round of tariffs, 25% to be exact, after the very first round of tariffs. Not the fentanyl tariffs of 20%, the extra 25%. This was done in the next few days after that, where China said, yeah, those H20 chips, they're not efficient enough. Well, those chips were energy efficient enough. They were designed for China because of U.S. export restrictions. And, the Huawei chips and China's internal company chips, they are apparently more energy efficient because they don't have any restrictions, right? NVIDIA had to make them a bit less energy efficient to give the same power because they don't have the same power as the H100s and the H200s, right? So NVIDIA kind of getting stuck between a rock and a hard place right now. They're trying to do their best, trying to design a product for China that meets standards from both parties, But unfortunately, now they'll probably have to axe all those products all together. So keep that in mind. But we did have some positive news from NVIDIA yesterday night, as a matter of fact, where they were wanting to invest $100 billion to make AI chips in the United States, which is going to be good for US GDP, of course, right? They said they commissioned more than 1 million square feet of manufacturing space to test the Blackwell chips in Arizona and AI supercomputers in Texas. The engines of the world, AI infrastructure, are being built in the US for the first time, said Jensen Huang himself in a statement made yesterday evening. Mass production at both plants is expected to ramp up in the next 12 to 15 months, and the initial investment is expected to be $100 billion and could reach 5 times that sum. So, you have some good news that came out yesterday, some bad news with China today. Obviously, the company is trying its best to, pivot to where the, export restrictions are, warranting their exports to go to, and trying to make savvy investments in the US to manufacture chips there as well. So, bit of a push and pull on NVIDIA stock. My favorite way of playing it is selling puts below the market because I want the best possible value if I'm to assume all the ongoing risks to NVIDIA's business model in the next 6 to 12 months. Moving on to Tesla right now. Tesla also hovering around the 254 mark, not doing anything substantial. And Tesla bar coding, doing nothing. No new highs, no new lows. You flush the lows of Thursday, though. That is a new daily downtrend, and you'll be looking for your bulls to save face and to save this support zone. 220 down to 192. It's just basically a tight. It's like the 20% range, right? But it's a very wide range of accumulation, trapped between resistance, which stands 300 down to 257, and support 220 down to 190. So we'll see. Probably going to be this way, guys, until earnings, right? Earnings are coming up next week, Tuesday the 22nd. I would be highly surprised if Tesla breaks above here or breaks down below there by next Tuesday. I think people are largely going to stay on the sidelines until next Tuesday. My favorite way of playing Tesla, you guessed it by now. You guys are finishing my sentences, right? Writing short puts way, way, way below the markets and not trying to predict too much in the short term. Moving on to Palantir. Beautiful day by Palantir here today, guys. 6.24% rocket ship daily uptrend. Very nice on Palantir. The lows of Thursday are your higher lows, $84, which is right above support, 83.61 to 77.19. Let's just call it 77. Yeah, almost. Well, they are breaking above, but, fractionally, marginally breaking above. Nice daily uptrend, though. Any move lower looking for a higher low for possible further trend continuation. Your next target is the big one. It has to be the all-time highs, 125. So very nice weekly engulfing move. Any consolidation, even on the weekly, guys, just looking for a weekly higher low, going to reset the weekly uptrend, right? Palantir's valuation right now is very rich, guys. I mean, if you're going for the long here, I wish you luck. It's not my favorite style of trade. I'm not going to say it's not going to work. I can't predict where it's going to go, but it's not my favorite style of trade. I'd rather wait for a pullback myself personally and then go for the weekly trend change maybe. But, I mean, you guys do you. And for a long-term portfolio, I mean, how long's your time horizon, right? For them to grow into this valuation, it's going to take a very long time. So question to you is, how long's your time horizon? If it's 5 to 10 years, your buys will probably be rewarded. I'm a bigger fan, though, if really the economy does contract and everything comes down. You can find Palantir sometime in the future. I'm not saying it's going there, but if you can find it again, 60s, not the worst proposition overall. Moving into SOFI right now. SOFI also up 1.10% today. Not too bad right now. The lows of Thursday are going to be your higher lows, 10.12. So they're trying to go for the daily trend change right now. If you roll this over, well, you'll just be looking at more consolidation, daily downtrend, and more possible weekly consolidation as well. Support stays put, 11.60 down to $9. My favorite thing to do on red days, selling puts well below the market, where the valuation is a bit cheaper than it is right now, even though right now it is very good on SOFI. The bears remain in control. We'll see. Can they push higher? Maybe, but the bounce size right now so far is not the best. Only a 50% bounce. Some stocks are 61, 78. This one only 50. So there is a notion that the bears can kick it back down there. And if that does happen, I'll gladly pick up a few more shares of SOFI down here. Moving on to Uber before last. Uber, 1.28% to the upside. This is a very nice bounce, guys. New daily uptrend above all your moving averages. 12, 26, 50, and 200 rather, sorry. Looking very good. And above support, 73 down to about 69 is that area of support. Looking pretty good. Higher lows are set. They move lower, looking for a higher low for possible further trend continuation. Where are they trying to go? Into all-time high resistance, 80 down to about 77. It's been a few times. It's been challenging for them. We'll see if we can get it done. On the weekly, look at this weekly bounce, guys, right? Weekly downtrend, yeah. But the size of the bounce on the weekly, over 78%. Looking good. So even if Uber pulls back a little bit, guys, probably a decent little candidate here for some short puts or maybe even a swing trade from support into the resistance range. Looking good, and the valuation, even at 70 bucks, is quite adequate in terms of price to earnings, in terms of your PEG ratio, and the free cash flow yield as well. And now, lastly, Taiwan Semiconductor, which has earnings, I'll remind you, on Thursday. They're down 3% in the after hours. Let's just put a little circle right there so we can identify where it is. So as you can see, guys, rejecting from resistance. Yeah, they have earnings, though, so you can't blame them. A lot of stuff is going to be relying on that earnings. 171 down to 156 is the mark. Low of Thursday is your weekly or daily higher low, rather. You do have support below you, though, 147 down to 138. As I was saying, my favorite way of playing this one, selling short puts below the market. This company is extremely cheap right now at 157. It's trading at a 17 forward price to earnings, a 1 peg, and a 3.66% free cash flow yield. The bears are still well in control of this chart. Everybody knows the bounce size as well is fairly adequate, 50%. Not the strongest, but not a weak bounce by any metrics there. So we'll see. Can they give us beautiful earnings and recapture more of this move? We'll see. But if they come down 100%, I'm going to buy more shares for my long-term portfolio and, once again, sell puts well below the market into the 2021 highs, which at that point, guys, would literally be a sell-off of like 42, 47%. Like, yeah, I'll take my chances with TSMC with that much of a sell-off. And that's pretty much everything I had for you guys today. The video is a bit long right now, but I won't show you the portfolio because you saw it yesterday, yeah, the portfolio. But I can show you a few of the trades that I just repurposed today. You'll see it's really not that much. So like a few things that we did here today, you know, the CVX ones that I got, I closed them. Like all of these are like 75, 80% closes, yeah? We opened some new ones, so I'll just show you from the start of the day. Wells Fargo, we closed yesterday. You'll see here. Micron, we closed this morning at 10 cents. We got it at 33. Closed it for 10 cents. Put the capital into an Elf Beauty 47 for 20 cents. CVX, we closed this one. We got this one earlier for, it was in the wrong section, as a matter of fact. It was 42 cents. We got it on Monday. We closed it for 9 cents already. 75, 80% profit. Yeah. We opened a Google here, 149 strike for 31 cents. 26, 27% annualized trade on that one. Very good. Symbiotic, a trade taken last week for 25 cents. Closed it today for 5 cents. So many trades were closed. I also closed an SOXL that's not here. It's in a different section overall, guys. And even some lottery trades that we took on UAL for an earnings play. We took the 54 short puts. 3 standard deviation. Expected move was 7. We went 20+% away into big support and the tariff lows, right? 18 cents. That'll be worthless by tomorrow morning. And I also closed my swing trade on the VIX because it was not moving adequately enough for me. I took a very big loss of only $6, 60 cents per share. It was not moving. SVXY is short the VIX, guys. When the VIX swings too much like this, and you like every day like this trade just gets burned. You really need a succession of just pure down days for that SVXY trade to come alive. Very tough to play, so I chose to close it at par in the event that the VIX has another spurt of a rally from any negative headlines. I didn't want to go underwater too much. It was very small. It was only like 10 shares, right? Like $300. You know what I mean? I lost like $6. Big deal. I get my capital back, and that's it. I also opened a hedge today, guys, at resistance. You remember me saying we're into resistance for a lot of these things, Qs and a lot of individual names as well. Any bad headline will send us down pretty quick. Well, I opened a very small hedge. QQQ put debit spread, 450 to 444s, $1.70 I got 2 contracts, 1% of the portfolio. And I was also telling people that up for consideration was selling puts on SQQQ or SQQQ shares or in the money SPY or QQQ puts targeting above the resistance range, like in the money puts here, right? And just going for some downside plays for some hedge trades. Not a bad location. And now happy that we did that today because maybe tomorrow those open at a profit. It's just a hedge, guys. I'm not looking to make like crazy money on it. Most of my portfolio is long, right? Just a hedge taken at, you know, an opportune moment when the VIX was down overall. That's the majority of the swing trades, but still a lot of wheel trades underway. I'll give you a more robust portfolio update as of tomorrow, but I wanted to keep this one fairly short overall since I gave you guys a big update yesterday. So that's everything I had for you guys today. If you enjoyed that, consider liking the video. Would appreciate it for the algorithm. Also consider subscribing to the channel if you're new. We do these videos every Monday to Friday after the close, and hopefully I see you back in one in the future. And lastly, if you have any questions, please always feel free down below in the comments to ask them to me. Anything you want, macro, stocks, options, strategy, anything you want, guys. I'm always there for you, so feel free to ask. And in the event that you guys want access to all of these trades in real time, the credit trades, right? The put credit spreads, the short wheel, the put trades like that, stuff like that, the hedge trades, the leap call contract trades, the upside trades, the call debit spreads, the long-term portfolio trades as well, because we do a lot of long-term portfolio building here too. Well, the link to the Discord, to this private trading community with almost 200 members where we all trade the same strategy. Everybody is on the same page. We look for consistent wins and just building accounts consistently over time, and also building long-term portfolios. Very fun group if you guys are looking for a group like that, where I give all my trades live and even private morning live streams every morning, Monday through Friday at the open for about 2 hours. I trade live, take all your questions on your stocks, your options, your long-term portfolios, and you can also watch them after if you're not there. They're recorded as well too, and you can ask me your questions in our chat rooms all throughout the day, and I'll be very glad to answer you very quickly. If you're looking for a group like that where you can ask me questions and just participate and trade similar strategies, if you guys love trading credit strategies as well, maybe it's the group for you. So the link is down below in the description of the video, and if not, I guess I'll see you back on the channel sometime in the future, guys. Take care. That's it for me. Have a good evening and